I'm a first-time home buyer, like what's the interest rates today?
Good clean credit, you're looking at about a rate of 1.4%.
1.4% on a 25-year mortgage. Oh,
you got to be kidding me.
Simple little things you can do is get registered on the electoral roll. That bumps up your score straight away. You go sky high.
So wait, hold on. I just want to make sure we got this correct.
Because voting in America, I mean, it's very important, but it's not increasing our credit score.
No, it's definitely not. That's kind of different.
Hey yo, speed my rants and gems. Speed my rants and gems. Y'all can do it, we discover. Peace to all the kings and the queens where the mother lie. Speed my rants and gems. Speed my rants and gems. Y'all can do it, we discover. Peace to all the kings and the queens where the mother lie.
Alright guys, welcome back to another episode on location in London. This is the Rants and Gems show. My name is Matt Garland, International MG. NMLS number 58700, but better known as International MG. All right?
Listen, he is not going to let that go at all.
I'm not.
My name is Quiana Watson, broker extraordinaire, international.
International broker.
Hashtag international.
Okay.
And today we have the amazing Sebastian here. Sebastian Newby, he is a mortgage broker here in London. Mm-hmm. We are across the pond, you guys.
Yes.
Yeah.
And he actually is a mortgage broker that, let me go back here, founder of the New Property Finance, right? Mm-hmm. So he's branded, if you guys can't see. He's branded. And he is directly authorized mortgage brokerage firm, is based here in South London.
Mm-hmm.
So you grew up in South London, and as a teenager, you worked hard to defy the odds, and we love hearing those types of stories. And now what you're doing is you are educating other people from your neighborhood and throughout London about the importance of homeownership and how you can help them finance that dream, right?
Exactly that, yeah.
Absolutely. Yeah. I mean, so first of all, before we get started, let's give a big shout out to Stork Restaurant.
Yes.
Right? We're here at Stork, Mayfair.
That's it.
Mayfair, London. So make sure when you guys come to London, we're in the heart of London at Stork. The food, the vibe, everything is amazing here. So make sure you guys tap in with Stork. We'll put that information in the description of this video too, so that way you guys know exactly where to go, you know?
Hey you guys, we are coming to you live from London, and we were wondering why aren't they a part of our community?
Look, if you're not part of the Rants and Gems gem dropping community, you're doing yourself a tremendous disservice. We got live events, behind the scenes, live Q&As with our guests. You need to be a part of the community.
You got to be a part of this community so you can ask questions to all of our guests, so you can interact with us, vibe with us, get exclusive behind the scenes footage. I mean, we're going to have everything you need in our community. So y'all stop asking questions on Instagram and join our community so you can get the real answers.
Exactly. So link is in the bio. Join the Rants and Gems certified gem dropper community today. Get behind the scenes action, live Q&As, free access to all of our live pop-ups, and the Rants and Gems live experience tour. So don't wait, don't hesitate. Link in the bio. Join today.
See you soon, gem droppers.
Peace.
I just want to say this because I really think it's so great. So we have MG, the mortgage guy here. Mm-hmm. We have Seb, the mortgage guy here.
Two mortgage guys.
Two mortgage guys, right?
Uh-huh.
It is going to be a great conversation. We are ready to tap into London's way of financing real estate.
Absolutely.
And he has already given us a wealth of knowledge behind the scenes. So tell the people who you are and just really double down on what your purpose is when it comes to your business, New Property Finance.
Well, thank you very much for the warm welcome, and more importantly, welcome to the UK.
Thank you. Thank you for having us.
No, well,
and you're the reason we're here in Stork too.
Right.
Good choice. So talk to us, Seb.
So my name's Sebastian Newby. I'm the founder and director of New Property Finance. Any asset-backed finance you need in the UK, that's what I do. We specialise across the UK, not just in London, nationwide. My purpose is to give back. You know, I grew up, my mum wanted to get on the property ladder. She got wrongly informed from a very early age, and that sent her to, she got her house repossessed at a very young age. That gave her a real fire in my belly. You know, I wanted to go out and give people the good advice, what they need to do to get the right advice on when they're going to get on the property ladder. And you know, years later, look where I am. I'm out here doing it, been doing it for 15 years. I'm an active investor myself. So when I'm advising clients, I'm also, you know, giving advice that I would give So that's what adds value. I want to sit down and get more and more people, especially from the community and from the areas that I'm from, onto the property ladder, understanding finance. Once you understand it, you can leverage it, scale it, and really grow and pass on generational wealth. So I want to drop some gems to you guys and give you as much content as possible today.
Man, that's amazing. I mean,
Yes.
we kind of say the same thing. I say the same thing too. It's like, if you can master finance, like there's two areas in real estate I think are very important: finance and construction, right? Though if you can kind of master those, then you can be super successful in your real estate venture, whatever you want to do in real estate, right? So it's definitely refreshing to hear that you have that same mentality across the pond,
Right.
across the pond.
Yeah,
you know.
that's it.
So let's start from the beginning, right? When did you fall in love with real estate?
So leaving school, I was into soccer, football. I didn't make it as a professional, so I was a bit lost at the age of 16, not knowing what to do, what direction to head in. My dad bought a property in Hammersmith, West London, renovated it, and earned a lot of money when he refinanced it. That opened up my eyes, and I said, yo, that's a good way to make money. It wasn't a big thing back then, so a lot of people wasn't into property back then. That sent me on my journey, so that's back in 2000. So from there, unfortunately, I was a teenage parent. From the age of 18, I had a youngster. I had to buck up my ideas, find my way, get the right path. I went to work for an estate agency. While in the estate agency, I was thinking, the houses are beautiful. I'm learning how to how the property market works, but more importantly, who's earning the real money. So I was like, the finance guy. So I went to the back of the office and I spoke to him and said, how does this work? Tell me about the finance side of it. He broke it down to me. He said, look, the mortgages, once you understand this, the world's your oyster.
So let me ask you. I'm glad you said that. Let's start the conversation. Like, if somebody's watching this, right? They working for the state or whatever the case may be. They're working a regular job and they want to now get into the mortgage business over here in Europe. How do you go about becoming a licensed mortgage professional? It's
a great question. So you have to get what's called a certificate in advice and mortgage practice. So basically, because that's a CMAP qualification, we call it here in the UK. You can do a home study, or you can go on like a 5-day course where you go in a classroom environment and they teach you the basics. It's important because if we're giving up assets to people and they need to understand they're getting the right advice, especially being first-time buyers. So that's the certification that we have to get as a.
So it only takes 5 days?
No, that's like a crash course you can go onto.
Okay.
It can take a lot longer. It's all about how you retain the information. There's a CMAP 1, CMAP 2, and then CMAP 3 is when you actually give the advice and the case studies, real life examples. So that's the testing that you have to go through.
That's good. And how much does that cost?
It costs about £1,500.
Okay.
Yeah, to do it all.
So it's not expensive, so to speak.
Not at all. And it's a great career. You've also got the banks to fall back on. You can become an entrepreneur. You can venture into property yourself. You can grow a business as what I have done and scale your business. So there's multiple things you can do once you are obviously qualified.
No, that's awesome.
Yeah.
No, that's awesome.
That's some great information to know, because so many people want to get into the industry and it's always different avenues. You don't just have to be a broker, you don't have to be an agent, but actually being the finance guy, being the finance woman, being the finance person. It can change things.
Well, and I think people always want to get into real estate, but they always say, I don't have no money, I don't know how to get into real estate, I don't know much, but why not just get a job and start a career?
That's it.
Right? Get licensed. Me and Quiana are both licensed professionals back in the States, so we preach this. Look, get a license. Make some money, because it's a stream of income and it can help you become an investor.
Honestly. And for people that want to, have families and grow and scale their businesses, it's a great opportunity to do it as well. So I always urge people, people see me and they think it's easy. I do make it look easy because I'm experienced.
I like that. You make it look easy.
Wait a minute. The key word, I make it look easy because I'm experienced.
Yes.
Let's just say that one more time, because a lot of people miss that one little part. Of course, we all started off as like amateurs. Like everybody was an amateur, and at one point, it probably wasn't easy. It didn't look easy, but now you're able to make it look easy and handle objective in the background.
100%.
Speaking of challenges in your industry, let's just talk about like when you are working with like your primary demographic of people that you're working with right now. What are some challenges that they are facing when it comes to finance?
So a lot of the time it's credit. Quick rant here. So I always try to say to people, you know, understand the whole credit side of things. If you understand credit, you can start scaling, you can leverage, and you can really fast track your property journey. I always say to people, you know, your credit report is your financial CV. Look after it. The more you look after it, the more it's going to help you as you get on and try and grow in your business. So that's a big thing for me, that understanding the credit.
So let's talk about credit, right? So in America, we use 3 credit bureaus: TransUnion, Equifax, and Experian. Do you guys use something similar?
We use exactly the same.
Exactly the same.
Exactly the same. So TransUnion, Equifax, and Experian. Okay,
and we have like credit score models. I think our highest credit score in America, I think, is like 850. You know, where you need but for loan programs, you need a minimum of, like for an FHA loan, you need like a 580 credit score. For conventional, you need like 620. Is it kind of the same over here in the UK when it comes to like credit scores?
It is exactly the same. So we have a scoring system, and we go up to 999. We get the credit scores vary. I'm a big advocate of credit conduct.
Okay.
So I know obviously the credit score is good, but it varies from Experian, Equifax to TransUnion. How they score you is different, and then how the mortgage lenders score you as well is very different. So what I say to people is all about your credit conduct.
Okay.
How you conduct your credit. So, you know, are you paying your bills on time? Are you late payments? Have you got CCJs, defaults? These are the things that are going to make the difference between what type of lending you're going to get, what type of deposit you're going to have to put down. So really important.
And what's the typical average credit score out here?
Average credit score, so about 750, 800.
750, 800, okay. And so now the credit conduct, so if they've been paying their bills on time, they're not over leveraging themselves, you know, maxing out their credit cards, things of that nature, so then the lenders will like them.
That's it.
Right? Now,
That's
what
it.
if for the folks who are out there who are not conducting their credit in the best light, right? Like in America, there's a lot of like credit repair specialists and things of that nature to help them fix their credit and repair it. Is there something similar like that here in the
Not
UK
massively.
as well?
I mean, it's a growing market at the moment where people are realizing that, you know, the importance of having a credit, and they're trying to fix it now. Simple little things you can do is, you know, get registered on the electoral roll. The electoral roll is where you vote. So, you know, trying to obtain finance, you're trying to borrow $250,000, being a white ghost against the white wall where no one's seen or heard of you, then no one's going to lend to you. So get yourself on the voters roll. Then that way we know where you are. Oh, that's where you live. That's who you are. We're willing to give you some money.
Okay.
So that bumps up your score straight away. You go sky high.
So wait, hold on. I just want to make sure we got this correct.
Because you know, voting in America, I mean, it's very important, but
yes,
it's not increasing our credit.
No, it's definitely not. You know, they don't care if you register and you vote. They're gonna say, oh, we're gonna give you an extra 100 points on your credit report. That's kind of different.
It's called the electoral roll, we call it over here.
Electoral roll.
So if once you register on the electoral roll with your local authority, your local council, so we call it over here. Once you register there, that bumps up your credit score straight away.
Okay. Wow. What's 2 other tips that they can do out here to increase their credit score for the folks out there who may have like 300 credit score?
Okay.
Right. What are the 2 other tips you can?
So using your credit utilization, so not going above 30%. So if you have £1,000, you spend £300 a month. You make sure you pay it back on time. That's another one. Down to your utilities, so water, gas, electric, pay that on time. If they can't pick you up with credit, they look at your utilities. If you've got gas registered in your name, are you paying it on time? If there's late payments, if you defaulted, or if they've had to give you a county court judgment, these are other areas that can affect you. So it's key information.
So they'll use alternative credit if it's not on the credit report to help qualify you or analyze your deal in underwrite.
When you say alternative credit,
so like America,
utility bills.
Utility bills,
oh, okay.
Like utility, cell phones. That's kind of like alternative credit.
Spot on,
right?
Yeah, that's what we call it.
Yeah, what do y'all call it?
Utility bills.
Y'all call it Spartan?
Oh, no, I said spot on, as in yes.
Oh, spot on.
Yeah.
Okay.
All right, cool. So we got the credit. So we got their credit down pat. Their score is going to go to 750. Now let's talk about, in America we do like the pre-approval process, right? Is it kind of the same thing over here in the UK?
So over here we call it the agreement in principle. So
agreement in principle.
Yeah, so that's the pre-approval.
Okay, so agreement in principle. Break that down for us.
So before you go house hunting, so you're keen, you're a first-time buyer, or you're an investor, you want to go put in your offers on the property, before you go and speak to a real estate agent, you need to get pre-approved. It's absolutely key. What you don't want to do is waste the vendor. The vendor's the homeowner. You don't want to waste their time. You don't want to waste the agent's time. And more importantly, you don't want to waste your time. So looking at making sure you get pre-approved, how much can you borrow? What's your lending limit's going to be? That's absolutely key.
Is there like a max limit, loan limit out here in the UK? Like you can borrow?
No.
So you can go.
Oh, wow.
So it's like, so in America, like if you're trying to do like a conventional mortgage, depending on, you know, what state you're in, you might can go up to, you know, let's just say in New York, for example, I can, on a one family home, we can go to like $934,000, and the government will back that loan through Fannie Mae and Freddie Mac. Is it kind of like the same thing out here in the UK?
Not really, no. So over here, lenders, obviously their appetite for lending at the higher, they call it larger loans, so large loans amounts. The larger you get, the more pre-qualified you're going to need to be, and make sure you're comfortable with that. The lenders are. But no, there's no limit.
There's no limit.
Oh, that's good to know.
Yeah.
And I'm glad that you kind of spoke into that. There's no limit, but since you are helping a lot of people, especially people that are just like first-time buyers and they're looking to purchase, what do you guys offer? Because we have different programs that we have in the United States. You know, they're not considered first-time home buyer programs. Some of them are for second-time buyers, depending on your credit, depending on your debt-to-income ratio. Also, you can't make a certain amount of money above a certain number to qualify. What type of down payment assistance or first-time home buyer programs do you guys offer, and do they have those limitations?
We do. So we do have a couple of schemes called the Help to Buy. The Help to Buy is a government-backed scheme where you have a 5% deposit. So basically, they're trying to help the people in the UK to get on the property ladder. They know lots of people, the cost of living is so high, they're struggling to save for a deposit. So in order to help them, they say you only need a 5% deposit. The government will give you a 20% deposit and back you if you buy outside of London, because the cost of living outside of London is a lot cheaper, and same as property prices are cheaper. However, if you're in London, the local authority and the councils will give you 40% deposit.
Wow.
So they'll back you. So what that does is that gives the lender appetite to give you more money because of the fact it's a lower loan to value. So it's a 55% loan to value if it's in London. If it's outside of London, it's like 60%. So it's where it's so cheaper, they're a lot more comfortable.
So wait a minute, I'll make sure I got this right.
I know, I want you to can you break it down in numbers for me? Like 400,000 pounds, like I want to, can you break it down?
All right, so you got £100,000. You find a property in London, it's worth £100,000. If it's in London, the government will back you and give you a 40% deposit. So they'll give you £40,000 as a deposit. You then only need to put in £5,000.
What's the qualification for that? How do you? Is there a process to get that assistance from the government? You
have to be a first-time buyer. What they don't want to do is have people manipulating the system, and you know you've got free homes and you're trying to use it again to get on the property ladder. So all they ask you, you're a first-time buyer. That's what your qualifications are.
That's it.
How do they verify that?
So you have to apply on the Help to Buy scheme. So you apply on the Help to Buy scheme. It's on the government portal. Put your details in, information, your job, what you do for a living. They work on a 4.5 times ratio. So 4.5 times your salary. Okay. That's what they look at.
How long does it take to go through that process to get approved for it?
Oh, it takes like a couple of days.
Couple days.
Yeah, so put the application in. It depends what the backlog of how many cases they've got to review. That can vary. It will give you information on the portal to let you know if they've got a backlog, 5 days. But we had a client yesterday. She went and she was trying to buy on the open market and couldn't afford it. So she actually went to look on the Help to Buy scheme and said, she come back to us and said, guys, look, I found a property for $335,000. It's a Help to Buy scheme. I only need to put down $16,500.
Wow.
It's affordable. It's a family home that I can have for me and my kids. Can it work? She went online, she applied for it, we got her pre-approved and made it happen. So she's now moving. If she looked on the open market, she was looking like a 2-bedroom house with 3 kids. It's not gonna help her.
Wow. This is useful, helpful. This is like impactful information.
Damn.
I mean,
and it only takes it could take a couple days. So like in America, everything takes
like
forever.
Forever.
You trying to go through the government for anything? Nah, you're gonna be waiting especially for home buying programs. That could take months.
Yeah, no,
literally get approved.
They realize that it's the importance of trying, and we're trying to make the process of buying home ownership in the UK a lot quicker and make the process easier. So they're on there, we do our jobs, the banks do their jobs, and we just make the process a lot easier. So.
And I want to break this down because, we do things a little different in the United States. So when you say deposit, that's basically essential to a down payment, right?
That's exactly, yes.
So if we're thinking just in like layman's terms, the government is giving them 40% towards their deposit / down payment to buy an entire house in London.
That's right. So
that is amazing.
It's a loan, it's a 5-year loan that they give you, but there's no interest to be paid on it for the first 5 years.
Okay.
After 5 years, that's when the loan repayments for the loan comes in. However, what we say to people is it's a foot on the ladder. the great thing that's been happening in England for many years is property prices keep on going up. So you buy it, you get your foot on the ladder, it goes up in value, you can either refinance, pay back that loan that the government gave you, and then the home is now effectively yours.
Yeah.
So you've then created generational wealth for your kids, and you're moving forward. So
the first 5 years, if you're a first-time home buyer, if you take the government assistance, you have 5 years of no payments.
That's right.
And then after that, for the life of your duration, you have to pay back, a couple dollars or pounds on a monthly basis on top of your mortgage payment.
Yeah, for the
right. And then, but what if you wanted to sell your house before the 5 years? Do you have to pay back that assistance in full?
Yes, exactly. Okay. So they come out, they value it, and make sure that they're going to get their money back. But what we try to advise people, so whenever a client comes to me, we work out what's your end goal, what are you trying to do, what are you trying to work towards. We work, and then we reverse engineer it. We then go backwards, and we say, okay, well, what we're going to do, we're going to map out a plan for you for the first 2 years. Even if you've got bad credit, you're going to go to a specialist lender. They're going to get you on the ladder. So don't worry. You make sure you make your mortgage payments on time. You make sure you keep your head above water with your payments. In 2 years' time, we're going high street. We're going to go get that high street rate. We're then going to look about in another 2 years, we're going to refinance the property or sell the property because it's gone up in value. We're going to move into a nicer home where you don't need government assistance because you've increased in value over 4 years. So
with the refinance, so you still have to pay off. If you refinance, you still have to pay off that assistance.
You don't have to. You don't have to.
So they can subordinate it, basically.
It's entirely up to you. So when you refinance, you can either take money out to do home improvements, you can pay back the loan. It's entirely up to you.
So if you take out money to get home improvements, the government won't say, well, you taking out £100,000, we want our money back first.
The loan's attached to the property. So regardless of whatever happens, the loan's attached. We do advise people and say, look, be smart about this because you've got a loan attached to the house. And that's part of the process. When we're advising, we've got a plan of action. Stick to the plan. So, but that's only one scheme. We've also got other schemes such as the shared ownership scheme.
Okay, let's talk about that. Let's talk about that. That sounded interesting. So he said that. Well, hold on. I gotta take a drink to that one.
We all set up. Like we really set up.
Let's share to that.
Talk about that.
So with the shared ownership scheme, it's a part rent, part buy. So for those people that can't get on the property ladder and they need government assistance, the government will back you up to 50%.
Wow.
So the house is worth $200,000. You buy 50% of it, so you have a 50% share. So you can only afford $100,000. The government will say, okay, we'll buy the other 50. You have to pay a rent. So the rent to the government you have to pay. So it's like a housing association. You pay a rent to them every month, but you're on the ladder. Some people don't like this. This scheme gets a lot of bad press because a lot of people want full ownership of a property.
Yeah.
And a lot of people say, oh, I'm not interested. I want to own the property. My main advocate is get on the ladder.
Yeah.
Get on the property ladder.
So basically, you're partner up with the government.
That's it.
Basically, to get on the property ladder.
That's it.
And then once you're on the property ladder, you can sell. And basically, it's a 50-50 split of the profit.
That's it.
If you refinance now, if you refinance...
Can you refinance the government off?
And pay them out? Yeah.
Right.
So we call that staircasing.
Okay, staircasing. Talk to us, Sam.
Yeah,
Let me get comfortable. Talk to us, Sam.
So with this staircasing, so for example, you had a job increase, salary increase, so you can now buy in increments another 25%, 10% share, so you can buy staircasing until you get full 100% ownership of the property. So again, people don't realize the benefits of it because once they hear shared ownership, I don't want to share. What I want to, but as I said, it's a foot on the ladder. Get on there for 50%. You only need, if you're buying a property that's worth 200, your share is 50%, so 100,000. You only need up to a 5% deposit for that, which is £5,000. Then over years, as your income goes up, you then staircase and you can eventually pass it on and own the property outright.
Now, can the government, since they are your partner,
Right.
Can they sell the property without you agreeing to it?
No, not unless you get repossessed.
Okay.
So if you get repossessed, then that's a completely different subject completely. But it's the housing association that you're going to be paying a rent to. So they just want their money back when the property goes up in value and you decide to sell or refinance.
That's now when the property goes up in value. So let's just say they refinance or they're trying to get the government off. Do they want the money that they actually put in out, or do they want a little bit more on top of that?
They want the percentage.
Got
so
it.
as long as they get that percentage back, that's what they're interested in.
Okay.
And that's going to be all spelled out in your loan documents and everything like that. It would say exactly like this is the time frame of how you can pay us back and everything. This is like your amortization schedule, basically.
It kind of reminds me of like our lease to own programs in America. Like it's kind of like lease to own. It's just it really is. That's what it is.
It is a lease to own, yeah.
But it's just a different way to say so. And a lot of people, like, they discount the importance of just kind of like you said, just getting your foot in the door, getting on the property ownership ladder.
That's it.
And I think this is an amazing program. And how often do you guys close these?
We don't do many of them because at the moment the market's been so competitive. A lot of people are doing like investments at the moment. So that's a big part of the business at the moment.
Okay.
So buy to lets. So that's when you buy property to let it out. So that's playing a major part of a lot of the business we're doing currently.
So what kind of programs do you have for like the investors? So let's talk about that, right? So if somebody want to buy to let, is it still like a 5% deposit requirement?
No, so you're expected to put down a 25% deposit.
Okay.
So a property's worth 100,000, you're expecting to put 25,000 down as a deposit.
Okay.
So you have to put what we call more skin in the game.
Yes.
Right.
Yes, more skin in the game. And we were talking off camera, you said there's no closing costs out here.
No.
There's no fees. So there's no like taxes, no transfer fees, none of that.
There's what's called a stamp duty land tax, which is
Okay.
paid. It's not payable if you're a first-time buyer, first-time homeowner. It's not payable up to 300,000.
Oh, wow.
Okay.
Yeah. So in order to encourage people to get onto the property ladder, it's not payable. Once you've bought your property, then the stamp duty tax does become liable. So
if I'm buying a house that's 500,000, like for example, how much would that
3%.
cost? 3%. So you're going to pay 15,000 pounds.
Yes.
Okay. So I mean that's a hefty closing cost, and
It is
that would be
hefty.
that would be your only.
That's the only
closing
cost.
You get that. Solicitor fees, so conveyancer.
Okay.
So for carrying out the legals and registering the
That's
property.
what I was going to ask. You guys, like, do you have closing attorneys? Like, do you have to, like, when you close on the property, it's the deposit, but what else do they have to pay at the closing table?
So I'll give you a quick rundown of the process. So you go through the process of you're interested in buying a home, you speak to a mortgage advisor. We advise you how much you can afford, you go out, you go house hunting and shopping. You find your dream home, you come back, we submit what's called a full mortgage application. Once the application goes in, the lender needs to do what's called an underwrite, make sure they approve you, check your documents, because you've only been pre-approved. Computer says yes prior to that. Once they do that, they check your bank statements, your ID, your pay slips, or if you're self-employed, they speak with your accountant and make sure everything's verified. Once they do that and they're happy with it, they do what's called a valuation. They go out and they value the property and make sure it is of value. They're lending you money based on that asset. They want to make sure it's got 4 walls and a ceiling and it's not about to fall down. They go out, they get happy with it. At the moment, we're having a lot of down valuations. So, for example, they go out to the property, it's supposed to be buying it for 100,000, it's only worth 90. So it's been down value. They're saying we're not quite sure it's worth 100. That happens quite a lot at the moment because everyone's a bit nervous with the property market. What's going to happen? You know, we're about to go to war. There's all types of stuff happening. So valuers are being very cautious when they're going out and valuing properties. Comes back, if it all comes back all okay, the mortgage gets approved. That's called a mortgage offer.
Okay.
There's your mortgage offer, all done. We then pass the baton on to the solicitor to legally register that property in your name. So that solicitor's then going to make sure that, you know, property's registered in your name, there's no charges against it, all done.
How long does this process take?
That's how long is a piece of string.
I need you to close in 10 days.
Now that happens a lot. Everyone wants it done speed.
Correct.
To get the speed, you need a solicitor that you've got a great relationship with. So I also advise that when you come on team with us, you get what's called part of our power team. Solicitor, accountant, you get us as a mortgage broker, we look out for you. So once you've got the power team in place, we all speak with each other. So we make sure as our client, you're getting the best service possible. Sometimes what happens is you get an accountant doesn't speak to the solicitor doesn't speak to the broker. That slows down the process.
All the time.
If you're an investor, you need to make sure your power team are communicating. You know, we do conference calls. I get guys that go to auction and they need to say, look, I need you to read through this document, a legal pack, make sure it's all okay because I'm going to auction tomorrow. And they need speed. You get what you pay for. So that's one of the...
So typically, if I wanted to buy a home here and I'm so happen to be a UK resident, how long would it take from approval acquiring the property, I identify the property, how long will it take me to actually go through the entire process and close?
8 to 12 weeks.
Okay. And that's typical here, right?
Yeah.
So 8 to 12 weeks from pre-approval process to getting into contract
Keys.
to closing.
Yeah. All right.
That's not bad.
That's not bad at all.
That's kind of like how we do it in the U.S.
Not really. Not Georgia.
No,
Georgia different.
No, I'm
4
talking
weeks.
about from no, he's talking about closing. I'm talking about from pre-approval. So when you get a buyer consultation.
Got it, from pre-approval to shopping.
Yeah, to shopping.
But from the moment they identify the property and under contract, we're talking from you about 6 weeks in.
No, like 10 days.
So for us to get the mortgage sorted can take up to 10 to 4 weeks, worst case scenario.
Okay.
So if there's problems, credit problems,
Yeah.
that could take up to 4 weeks. If you're squeaky clean, good credit, no issues, it flies straight through. Lender likes you, fly straight through.
Okay.
They stamp it, off you go. Then we pass the baton over to the solicitor, and then it's a case of him registering. If that other person's buying, if there's a chain. So a chain is where you're buying off another homeowner, that homeowner's buying off another homeowner. So that's a chain of property that you're in.
I like that.
Yeah.
Fast closings.
Fast closing. It's very
Fast
similar
closing.
to how we do things.
Yeah.
Very similar.
So, all right. So let's talk terms, right? America, we do 30-year mortgages, which is common. So we do 30-year, 20-year, 15. But the most common is probably like a 30-year term, right? Because that's going to give you the cheapest payment possible. What kind of terms do you guys offer over here?
So in the UK, we do a mortgage term of typically 25 years. If you've got facilities to pay the mortgage earlier, then we advise you to do it earlier, 15, maybe 20 years. However, if you're a first-time buyer and you're struggling and monthly payments might be a bit tight, we've got lenders that will take you up to 40 years, 40. So your mortgage payments are going to be low, but it's going to help you with your payments, your monthly payments. The interest overall you're going to end up paying is going to be obviously higher because you're in it for a longer period of time. So we do explain it at the offset to make sure you're aware of that. However, it's not going to be your forever home. You're just getting on the ladder. So make those payments, get on there. In 2 or 3 years' time, we're going to refinance, we're going to sell up, and we're going to move on anyway.
Yeah.
So,
and what interest rates? I know we can't. The market changes, right? Interest rates go up and down.
Listen, I like the way he said that. Let's just make sure we say this very clearly.
Yeah, I got to be clear.
We are not quoting interest rates. Interest rates fluctuate day to day.
Yes.
This is an example of today. By the time you see this episode, the rates may be higher or lower.
Absolutely.
We're just giving an example.
Examples only, okay? Check with your lender, your mortgage advisor for whatever you're looking to get pre-approved or whatever. And ask them what the rates are. But let's just say we were doing a deal with you today, Seb. What are the rates like if I'm a first-time home buyer? Like what's the interest rates today?
Good clean credit, you're looking at about a rate of 1.4%.
1.4% on a 25-year mortgage. Oh shit!
You got to be kidding me.
You got to be kidding me.
Okay,
That's almost free.
Say it
That's
one more
almost
time.
free.
1.4%.
1.4%. Money's cheap at the moment, so they're giving people saying, "Look,
not in America.
No,
not that
in America. Cheap. I haven't seen a 1.4% ever. Ever.
We dropped down to almost 1%. Yeah, in the peaks in the heart of summer last year.
What was the rates prior to COVID?
Oh gosh, we're looking at during COVID they went up to like 3%. So the rates did creep up, and we saw that happen. But then lenders weren't sure. Some lenders backed out. When we went into COVID, some lenders backed out the market and said, "Look, we're not sure we got an appetite for this."
Yeah.
Other lenders were competitive. At the moment, there's a rate war going on, and lenders are fighting for business. Everyone wants a piece of the action. So that lender won't cover. That lender will cover you and do something for you. So,
oh wow.
And then now they peaked up to 3%, and now they dropped to 1.4%.
I am excited. I wish that they kept this same energy in the United States.
I wish they did, because right now in America, our interest rates, we probably went as low as like 2.5%, 2.25% during the pandemic. But now we just rose back up to like, we're over 4% right now.
Correct.
On a 30-year mortgage.
It's ridiculous.
We haven't seen rates like that.
It's ridiculous.
Yeah, it's getting kind of high. And I think by the end of the year in America, our interest rates for mortgages will be over 5%.
Wow.
Yeah, it's getting up there. And home prices are steadily increasing in America. Like right now, year over year, I think it was like a 20% increase nationwide in America on home values. And in some areas like Atlanta or Phoenix, Arizona, they're up 30+% year over year. So has the market been similar over here in the UK since the pandemic? Because you know, we see the interest rates over at 1.4, but how have home prices? Have they been going up as well?
That's a great question. So at the moment in the UK, there's a housing shortage. There's not enough houses.
Supply and demand.
That's it.
Supply and demand. Same thing in America.
Now we're in an inflated market at the moment where prices the inflation's ridiculous. However, because of the supply and demand issue, the prices just keep on rising, and it's been doing that for years at the moment. At the moment, it has gone, and we thought it was going to slow down. So the pandemic, everyone thought, oh, we're about to hit that crash.
Right.
It's about to happen. Everyone's been talking about it. Everyone's coming up. No, it didn't happen. What happened is it slowed down. Everyone was kind of thinking, oh, are we here? Ramped straight back up again. And everyone went out in their herds, and governments trying to help out and say, look, you know, get building. And because of that now, the supply and demand to go and view one property, 20 people outside one home.
Wow.
Sounds familiar,
sounds like Atlanta. It sounds like the United States. It sounds like the shortage is so low. Housing supply is low throughout America. Specifically in Atlanta, we went from, you know, we always kept out 1.5 months of inventory. We now have 0.8 months of inventory, less than 1 month of inventory.
Wow. It's crazy.
So are they just not building quick enough over in America then? Because you've got stacks of land all over.
Listen, we had a whole thing. It appears that we have stacks of land, but what happens is we have a shortage. Same way we have a shortage on lumber. And because of that, the supply chain slowed down, the building chain slowed down, so we have to catch up. And there's just too much demand to keep up with the supply.
And now with this war that's about to start, who knows how that's going to affect everything. With gas prices are going to go up probably globally right now because of this. You know, I think the supply issue is going to get worse in America, and it sounds like the same here in the UK also.
We had a problem not only with just property supplies. So again, builders slowing down the process of building in the UK because they couldn't get materials, they couldn't get over the borders. So we've had a nightmare, which is slowing things down even more.
Let me ask you this right now, in terms of Americans coming over across the pond to invest, are there programs out here for basically foreign investors to come out here and get mortgages as well?
So there's two types of things. There's what's called expats and foreign nationals. Now, at the moment, there's nothing in place for them from the government back to get them, encourage them to come over. So that's not in place.
There's no incentives.
There's no incentive whatsoever. So if you're a foreign national, which means you're not a UK citizen, there are lenders that have an appetite for lending. It's a competitive market. They want your business.
So that's good.
How you fit in with them? So buy to let. So if you're going to buy property as investments, there's opportunities out here where you need a deposit as low as 20%. So there's opportunities out there at the moment for foreign nationals to come over here and buy up. The Russians have been doing it for ages. The Americans, there's opportunities here. You need to get over it and start doing it some more.
Let's tell us more. You know, and tell us more about how Americans can come over here and invest in property and some of the benefits of doing so.
So you get the London market. The London market is at the moment booming, and it has been for many years. With as little as a 20% deposit, you can buy a buy-to-let investment property over in the UK. So there are lenders out there that will give you that opportunity to do it. Now, there's not massive amount of lenders, but there's a niche amount of lenders that will specialize in foreign nationals. Get your butts over here. Start looking.
So with that being said, so we put down a 20% deposit. Now, do we have to pay? I know you said it was that 3% tax fee. Does that still apply if it's over 300,000?
Yeah, so
we still have to pay that
there's
tax.
There's still going to be a stamp duty liability tax that you're going to have to pay. So that's still going to be here. But the main thing is, you know, buying in the right area. So again, getting the right real estate agent that's going to advise you, getting the right broker that can search the market to get a lender to suit your circumstances. That's absolutely key. We're great because we have access to the whole of the UK market. So any lender we can have access to in the UK, where some people only have, you know, a panel or selected a handful amount of lenders. We can go to anyone.
So let's talk about that for a second, right? Because you as a mortgage broker, you're shopping around these deals to the various lenders depending on the borrower's credit profile and what they bring to the table. So, you know, in America, we have like 8 paper banks, right? And then we'll have like, BC type lenders, right? Do you guys kind of like have that same thing over here?
So we call it high street lenders. So
Okay.
high streets are the competitive ones.
Okay.
They're very flexible, relaxed on what they do. To meet their profile, it's like fitting a square into a circle though. You
Okay.
have to fit into what they're doing.
Yeah.
However, there's a specialist market, and the specialist market, they're hungry for business. They're doing the riskier type of lending. So they'll do like high rises. They do if you've got bad credit. Your income's a bit quirky. You're paid of 4 different sources of income. You've been self-employed for 1 year. You've been limited. So they will do that for you because they've got an appetite for that type of lending.
Okay.
The high street, they're going to stay away from you. You know, they haven't really.
They don't want that.
They don't want that. If
They don't want the risk.
If the market crashes or something happens,
Right.
and then
Yeah.
they've got you on board, and they're not too sure if you're going to pay or if that property is going to be worth what it's worth.
Right.
So they won't take the risk, but the specialist market will.
Oh, good to
Now,
know.
in the specialist market, are they doing like any type of renovation loans? Because as I traveled so far since I've been out here, I'm seeing a lot of these properties look kind of old, right? So I know people, they probably don't have enough money to repair it. Are there any programs out there to like rehab the property also?
No, so we're very different how you guys do it, because I believe you guys do give you help with the
Absolutely.
programs.
So yeah,
Yes.
so there's programs out there for first-time home buyers, or if you're buying your primary residence, you can use like a FHA 203K, which gives you like 100% of the rehab cost to fix up the property as well.
Wow.
If you're an investor, you can do like a hard money loan if you want to fix and flip,
Right.
and do things like that. So we definitely have those programs. You guys don't have those type
It's
of programs?
available for the hard money, you call it?
Yeah, we call it hard money.
So we call that bridging finance.
Bridge and
Okay.
finance,
Yeah,
okay.
so bridging finance, so like a bridge,
Yeah.
bridges. So what they do is that short-term loans, short-term finance.
Correct, same
Okay.
thing.
So they know that you're going to buy it, you're going to flip it, you're going to add value to it. So as long as the GDV is sensible,
What's GDV?
gross development value.
Okay.
Okay.
So if you're going to increase the GDV of that property, you buy it for 100, it's going to be worth 200. They'll give you the money to carry out the works.
Okay.
In order to do that, they need to see what's called a schedule of works. How long is it going to take? What materials you're going to need? What builders are going to come in to do it? If you give them a schedule of works, they'll give you the money for the works. They know it's going to go up in value, so they will say, look, let's encourage you to go and hurry up and get that build done.
That's good.
Is it a particular loan to value they'll lend up to with
So
those type of?
65% of the gross development value.
Okay.
So that's how
So
they
it's
work
kind of
it
like
out.
the same thing in America. Most hard money lenders will go up to 65% of the ARV. Some that are aggressive might go up to 70 or 75%.
Same.
But I try to tell my people, stay away from
Yes,
that, because you
exactly.
can be shooting yourself in the foot. Like if the market declines, you can't sell it, you won't be able to refinance out of that loan
Exactly that.
because it's a
Yes.
short term. So it's the same strategy.
Exactly the
Same
same,
trend.
yeah,
So we're talking the same thing but different language,
Yeah.
basically.
Yeah, that's exactly that.
Yeah.
Okay.
No, that's interesting. So I mean, we covering a lot of information here on this episode. We covered Americans coming over.
We covered
here.
Americans
We
coming
covered
over
credit.
here. Credit.
All right. We covered the first time home buyer program,
Which is amazing.
Which I think is
That's-
it's absolutely
First,
incredible.
I think yours is better than ours.
100%. 40% down.
40%. You're going to give me 40% just to move?
What's your programs that you guys have?
It ain't 40%.
It ain't 40%. Shit, you be lucky you get 2 cents.
That's what I was going to say. You mean, it's like, we have some programs. I mean, it depends on the state. It depends on where you are, because ours are just like different. Like Atlanta, they have like the Georgia Dream. They'll give you $5,000 towards your down payment, but you have down payment and you have closing costs.
Yeah.
We just have so many different expenses.
Yeah.
There are some like specialty programs I think that Rashana talked about in Chicago. You could probably get $20,000-$30,000 there.
Yeah, and-
it depends on where you are,
Yeah.
but
and that's typically what it is.
yeah, but
It's it's not a percentage.
there's no red tape on yours.
Yeah.
See, ours there's restrictions. Like I have people come to me, they're like, I'm ready to buy my first house. I make $100,000 a year. I'm like, let me stop talking right now. None of the programs in the United States support you making that much money.
Yeah.
You have to make less than what they consider to be, by the Census Bureau, the average income. So 60,000 or less, or 40,000 or less. If you make
Working poor. Working
so if you
poor.
make more than that, you don't qualify. But yours is like, I don't care what you make, we're going to help you. That's why yours is better.
And that's the big difference.
Yeah.
America, like these programs, they make it so restrictive that the people who really need it can't get it.
Correct.
Because even if you can get approved for that grant, if you're making 50, 60, you probably can't even qualify for the home, depending on where you live.
Right.
So it's like it doesn't even matter. But what I love of what you're saying is it doesn't matter out here. If you're a first-time home buyer, there's no restrictions. We verify that you truly are a first-time home buyer. That's it. Here's the 20% or 40%, depending on what area you buy, and go out and go find you some property and get on the property ladder. America, I just feel like they make it so much more difficult.
They do.
They make you jump through hoops. I mean, it could take months, like literally 6-7 months to go through some of these programs.
Yes.
Before you can even go out and now shop for a home, right? You got to go through the program first just to get scrutinized by them. And oftentimes people go through the 4-6 months and don't even get approved.
Correct.
Like it's a bad system.
You guys mentioned the closing cost. What is the closing cost?
Closing costs. So closing costs typically is a percentage of your loan amount, just to kind of break it down like this. So if you got a $500,000 loan, it could be 5%. You know, if you're doing like you call a specialty loan, you got bad credit, maybe it'd be 6% of the total cost. So you got your lender fees, you got title fees, you got state tax and stamps, you got all of these fees. So like in New York, your closing costs, if you're buying $1 million property, oh, you got a mansion tax. So anything over $1 million in New York, you got to pay an extra 1% to the state. Right, so the closing costs could be $40,000-$50,000 on top of still having to put
your down
5-10% down as a down payment,
which is the equivalent of your deposit.
So it can get really expensive. So if someone's like, if a minimum down payment is 5% or deposit is 5% plus closing costs, somebody may come out with 10 to 15% total out of pocket. You know, so it can get really expensive.
Does it put a lot of people off? Does it slow it down?
Yes,
it
does.
100%.
Look, I mean, absolutely.
It's people don't have the money.
They don't have the money.
They don't have the money.
They have the desire to purchase, but they don't have the money. So yes, it does.
No, it makes it a little bit more difficult for people in America. To purchase, but it's still opportunities for you to get out there. Because again, if you can get approved for these programs, sometimes the lender can give you a credit to help with closing costs. The sellers can give credits to whoever's selling the house. They can help you with closing costs as well. So there's many different things that you can do. But when you're in a competitive market like we are, and like you guys are here, cash wins, right? So if you're not asking a seller for closing cost assistance, this, that, and the third, your offer is more than likely to get accepted, especially if you're competing against 40 other people. Right? But if you're asking for a lot of stuff, you're not going to get your offer accepted at all.
Listen, don't ask for nothing. just try to win the offer. I was just looking on my my social media page. The house went live. It's like 300-something thousand in Atlanta. 40 people standing outside waiting to see one house. That's just one day. Can you imagine what happened the rest of the days? So, I mean, I know we got to wrap this up, but I wanted to at least kind of give more perspective of why people that are in the UK, they need to talk to you.
Absolutely.
They got to work with you. Like, there's opportunity here, and I love America, but you know, you guys have a great opportunity here to own
especially
property.
For the first-time home buyer.
And it's something that I definitely think is a great thing to share.
So let's leave them with one more rant, one more gem.
Yes.
Talk to the people, Seb.
Your credit report, I said it at the beginning, I'll say it again, make sure you sit down and look after this. This is going to be the difference between you fast-tracking your work and trying to get to your end goal, and it's going to be slowing you down. Get that credit report in order, monitor it monthly, keep an eye on it, state your low credit utilization, do not get too much credit, make sure you look after your credit. It's your financial CV.
Financial CV. And what's your last gem?
My last gem. If you want to get your offers accepted because we're in a competitive market, get your broker to submit your mortgage offer. So when you're going over and trying to put an offer forward for a property, get the broker to submit it to the agents and show them that you're serious. It filters out the time wasters, it shows them that you're serious, ready to go. You'll get we do it all the time for our clients and they get their offers accepted all the time.
Wow, I love that. That's a super gem. Well, tell them how to find you, Seb.
Seb the Mortgage Guy, that's me personally. So if you want to find out a bit about me, what I get up to on a day-to-day, but more importantly, if you're trying to get some access to finance and get on the property ladder and get some information and knowledge, we do a lot of it on new property finance. So that's the page you can hit us up on.
Look, make sure you guys tap in with our guy, Seb. He's our guy here in the UK for anything real estate financing. We're going to put all his links in the description. So make sure you guys tap in with him. This was a dope ass episode.
It was an amazing episode. We learned so much.
I learned a lot just by talking to you. And we need to now start looking at some properties.
Yes, we do. Because I feel like there's opportunity here.
100%. And we only got to put a 20% deposit.
Right.
And that's it.
And I can immediately have me a tenant.
And we can Airbnb it too.
All of the good things.
Now you're talking.
Now we're talking.
Look, we got more gems to share, but we're going to keep this short. Look, this was amazing. Like, comment, share, subscribe. Rate us on 5 stars on Apple. Leave a review. Share it with your community. My name is Matt Garland. NMLS number 587. What's my? I almost forgot. NMLS number 58700, but better known as International MG. That's a good idea.
And my name is Quiana Watson, better known as International Broker Extraordinaire. License number 317576. Thank you guys for tuning in to another episode of the Rants and Gems.
Shout out to Stork, London. Peace.